We're here into the mid-afternoon on Wall Street with about an hour to go before the closing bell. And this is your intraday check-in on Storm Stock Solutions. I'm Grant Mercer, and let's bring a little clarity to the chaos in today's tape. The tone right now. Tech and AI are back in the spotlight. Geopolitics is nudging sentiment, and a surprise mega deal in media is grabbing headlines and raising questions about where the real growth is in entertainment. The biggest news shock to the system this hour is that reported $83 billion Netflix move for Warner Bros. Discovery, highlighted by MarketWatch. On paper, it would be a huge consolidation of streaming content, but some analysts are already framing it as a possible sign of weakness for Netflix, a signal that it feels pressure from YouTube and TikTok, especially among younger viewers. Traders are going to be watching how Netflix trades into the close, but also how this ripples through the whole media complex. Legacy studios, cable players, and even short-form platforms that are eating traditional TV's lunch in terms of attention. On the upside, semis and AI remain an important tell. According to reporting from MarketWatch's Brittany Nguyen, Nvidia stock is increasingly shrugging off the Trump administration's move to again allow U.S. chip sales to China. Some analysts see a sizable reopening of demand, while others are wary of future political roadblocks. The key shift since earlier today is that the market seems more willing to look through the headline risk and refocus on Nvidia's core growth story. That's helping underpin sentiment in AI hardware and the broader chip space. We're also seeing the labor backdrop come into clearer focus. MarketWatch's Jeffrey Bartash points out that job openings have ticked higher in what he calls a low-hire, U.S. economy. A lot of this appears tied to temporary holiday work rather than a broad hiring surge. For markets, that combination, more openings, but not a lot more hiring or firing, can reinforce the narrative of a slow, steady labor market rather than a boom or a bust, which tends to keep rate fears contained and supports a more risk-on bias in it. Equities. On the risk side, this hour's conversation has a personal finance twist. Dan Moisant, writing in MarketWatch, is highlighting some of the complexities around required minimum distributions and Roth conversions for retirees. It's not a market mover in the intraday sense, but themes like tax uncertainty, withdrawal rules, and retirement income can feed into how older investors think about risk assets versus safer income plays. Those are areas to handle with care, because tax and policy shifts can alter the math quickly. In the background, I'm also watching a few under-the-radar policy stories that could matter more over time. One is the Trump administration's push to scrap the Biden-era Save Student Loan Repayment Plan, covered by Jillian Berman at MarketWatch. Roughly 7 million borrowers are caught in that tug-of war. It may not swing the S&P 500 today, but anything that changes monthly cash flow for that many consumers can affect discretionary spending, credit quality for lenders, and ultimately the consumer stocks tied to those wallets. And then you've got the more structural tech stories still simmering. There's fresh commentary that the real money in AI chips may be in the less glamorous plumbing, things like companies supplying ultra-pure water and infrastructure for semiconductor and data center production. That's a reminder that when a theme matures, the market often broadens out from the headline winners like Nvidia to the ecosystem around them. Heading into the final hour, the key watch points are how the market digests that potential Netflix, Warner Bros. Discovery deal, whether the AI and chip complex can hold its composure now that China sales are back on the table, and if this slow but steady labor picture keeps the broader indices on relatively firm footing. I'll be back around the closing bell with a full wrap of how the major averages finish and which themes carry through into tomorrow's trade. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,